Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to do daily technical analysis on gold and silver. We go over this every day just to see what kind of differences we're seeing, see if we're any positive developments, negative developments. What I see in gold and silver is it just doesn't seem like it's time yet. And we're seeing oil take off. We're seeing natural gas take off. And those are the first ones to take off. And at the end of this presentation, I'm going to compare kind of the time delay that gold has behind oil. Oil, I think, is a leading indicator of inflation. That'll usually go first. Then when the input costs for commodities and for products go up, that's energy and the input for commodities themselves, we'll start seeing inflation in the CPI numbers. Then gold and silver starts to, I think, will start to launch. So when is this going to start? Again, I try not to predict. Predictions are just going to get you into trouble. I'm not going to get it right. No one's going to be happy with it. The timing is incredibly difficult. So rather than that approach, what I do is I say, well, what's cheap? And then I accumulate cheap assets when they're cheap. I try not to time it perfectly. And then I just hold on. And then when the money comes in, and it will come, gold and silver will be pushed higher at some point. It could be between now and a year from now. We'll all be, happy that we're in these assets and that we bought them when they were cheap. But let's get in here. This is technical analysis to see if we got, look at the direction, see if there's any buy points, and I'll give you my financial opinion. It's just an opinion. Do not take it as advice. And here we go. So here's gold and silver. We're going to look at the dollar. We're going to look at the 10-year. We're going to look at gold. We're going to look at a whole bunch of stuff here. So dollar was barely up today. You can see it was going sideways, chopping around. Gold was up in the morning when the dollar was down and reversed when the dollar reversed. We both ended basically flat on the day. Now, looking at the dollar, I'm going to throw some trend lines in here. The dollar does look like it's strengthening. Now, is that going to matter? I'm not exactly sure right now. I'm in the camp that the dollar is going to have to get weaker at some point. But that's what I'm looking at. And you could even draw it like this as well. Kind of draw it like that. And this is a funky scenario because we basically were coming down and we entered it from the bottom. We entered it from here up, which is a little bit weird. You can also, yeah, we'll see which way this thing breaks. With oil going up, with an expansion phase of real estate out in front of us, it takes time to build. And we are seeing inflation. We have a synthetic inflation is what I'll call it, from money printing and stimulus. I call that synthetic. It was a synthetically derived inflation. Out in front of us, which does take some time to feed through the system, is the expansionary phase of real estate, since we just entered it. It usually takes a year to get that money into the system, but we have this synthetic inflation, which I think could last a year or two right before it. And I would suspect and agree that this is the dollar, which is the dollar, a fiat currency based against other fiat currencies, which are also being debased. So it's the strongest of the weak. But I would, in my opinion, I suspect this to go down, not up. If this goes up, it doesn't mean that the thesis is necessarily incorrect. It could mean that we have something in the short term where people need dollars. But overall, when we get into these expansion phase of real estate and inflation, usually that is paired with the dollar getting weaker, the index. But we'll see what happens. The 10-year looks like it's running out a little bit of steam. We've got a black candlestick. It's probably going to pull back a little bit before heading higher. But with inflation, usually what you see is a weaker dollar and higher interest rates. We have the higher interest rates moving on up, but we don't have the weaker dollar yet. And these things take time to play out. They don't just happen overnight. But that's the break that I see right there. This could come back and back test it or come back a little bit. That's pretty common to break a downtrend and then kind of come back a little bit. I see it all the time. But that's the 10-year there going up today. We've got gold. What I'm looking for in gold is I'm looking for a contraction. I'm looking for something to, and what I'm kind of looking for is, I'm trying to find like a pattern that's going to contract down or something like that. Something like this. You know, are we going to kind of just contract and then move on higher? Are we going to go lower? Are we going to break to the downside? And, you know, looking at this and these big, large down candlesticks, it makes me think we want to break to the downside. But with oil moving as aggressively to the upside, it poses a weird scenario here. So right now on gold, tough to say which direction. If I were to take a stab at it, I would say lower, based off of these large selling pressure candlesticks and then the small up days, which means that we are in a downtrend and we're going to put pressure on this downward support line. And I'm looking for the buyers to step in and lay a fat, big white candlestick. And I haven't seen that yet. So I stick with the trend until it is reversed. Now, silver looks like it's trying to put in some work. Kind of a bigger update today, almost a bullish engulfing pattern. But we still have these big momentum down days. The selling pressure is quite great, all coming down here. Is this going to continue lower? I would say yes, with the current momentum and trend. We did not break this downtrend. It broke and then failed. You can kind of see right there where that trend line is. So I would say we still have downward pressure until it gets reversed. But it's positive with the bullish engulfing pattern where we could try to break through this downtrend line. Platinum is looking a little bit better. We kind of woke up and broke through the downtrend line. A couple of down days here, a little bit of an up day with the momentum coming back down. We're probably going to have another small down day tomorrow, hopefully, and we'll see what happens. I mean, sometimes we have... This is all working with statistical probabilities. I just want to make it sure everyone understands that. The black candlesticks just means that you opened up and then throughout the day it traded up and then the momentum's coming back down. Usually it's a down day next to it. Usually. But we'll see. It's not always. Looking at GDX, I mean, man, I'm looking for contractions. I'm looking for things to come to a point. And it almost looks like it is. You know, you've got this kind of like point here where it's all just coming down to a point. And I'm looking for a break higher where this thing gets tired going down. And the reason I'm looking for a break higher is we're seeing oil go up, which is, and that's usually a leading indicator of inflation. We have inflation in the system. We can see it in the CPI. And I'm just waiting for the gold to account for it. And it hasn't accounted for it yet. So GDX is heading down into that little corner. We're almost in this corner as well. Something like this, maybe. We definitely have this going on. Where we got that, came out, it's kind of coming back to this. You know, we trying to put in, best fit line is that. But we're not turning around, we're not really selling off, and we're not really going up. It's like a stalemate right now. We're seeing that in some of the the individual companies as well. EXK is a silver company, and it's just kind of going sideways here. Not seeing the buyers step in and push it higher. Mag Silver, again, we got a little bit of buying pressure, but it sold back off a little bit. Just looking to the left, I'm not seeing a great setup here to go long it. Discovery Silver is looking a little bit better. We've got this nice huge momentum coming down. We've got a bullish engulfing candlestick, which usually is a reversal pattern to move higher. But again, I think we're going to have to base out a little bit before moving higher. And we're doing that. Big bullish engulfing, another bullish engulfing. It looks like we're trying to put in a bottom. But I wouldn't go long here. I'd wait for the downtrend to break. Franco-Nevada's still in this downtrend line. It's still selling off. Say it's getting let me see here. Are we getting to a point where we get some support? We're getting there. It's getting closer and closer. It's just below it. The support's just below it. So I bet you we're going to come down and tag this support line. We're selling off for wheat and precious metals on the short term. It's still heading lower. Looking at this from a little bit longer term perspective. And we did break through this to the downside. So we could see some downside selling pressure still, which we're seeing. We got Sandstorm Gold. Still, it's like it's slow, but we're not really selling off, but we're not really going anywhere. We're getting pretty low. And I'm just going to show you, this is the last bull market right in here. The mid 98 was the bottom. 2008 was the top of commodities in the real estate cycle, and gold was lagged a little bit behind it. And this is the delay. I mean, basically, oil shoots higher. So 98 was the bottom, 98, 99. We shot higher on oil, but gold didn't do anything for a while. See how it lagged behind it? And it lagged, it was going up 99 to 01. And it was lagged behind 99 all the way by about 3 years. And what I did is I shifted the black line and left the gold line in place. So I said, how far do I shift this line to match the two curves up? And to match the curves, oil is the green line, gold's the gold line. I had to shift it 3.28 years lagged. That's the shift here in the beginning. I lagged this over and then plotted it, and it looks like it matches up pretty well. Like this move is this move is this stuff, the big move is this guy here. So what it's saying is gold, at least the last bull market, is lagged by 3.28 years, and you can see it almost very close how this thing is lagged. The bottom's here, the bottom's here. We pulled up. I mean, it could be a little bit off. We might move it a little bit to the left, but it's about 3 years lagged. So if oil is moving on up, I think we've got like a 3-year lag potentially behind it. So you guys who think, you're seeing oil go up, you're seeing these other commodities go up, gold's just a little bit lagged behind it because all those commodities are inputs for other products. And the inflation will be seen in the CPI when the commodity prices flow through the processes and get sold to customers in manufacturing facilities. So I think gold and silver and all these, they're just lagged behind it. They're kind of the ones that they'll move first. They do like a kind of a jolt up, and then it kind of goes sideways for a long time and then starts to move. So I think we're just early to this game. I think that's it. And we just need to hold on. That's my opinion. And we're seeing oil go up, which is a good thing. Don't be jealous of that oil's going up. I would be getting bullish and more bullish on the precious metals, following it in the future. It's just lagged, and maybe my lagging isn't perfect. Maybe it's a little bit less than 3 years. Maybe it's more like 1.5, 2 years. It's tough to say how you tie it all up and get it to perfectly match. But here it's saying it's about 3 years, a little bit over 3 years is what I've got. And if we see oil move up, if we see commodities move up, watch for gold and silver and all these other ones to kind of lag it a little bit. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't already. And thanks for listening. This is Finding Value.